For those of you, you can, hi Daryl. For those of you who want to do your video, we're going to try to make this as interactive as you can on financial. Hi John, yep, your camera's just right there. Hello Dee. For those of you who want to keep your video camera off, that's your choice. I know what it's like on a Monday morning somewhat, but don't hesitate. We don't care what your hair looks like on a Monday morning. We'd love to see your face if you want to turn your video on. Yep, Lee did. Thank you, Lee. So we're going to get started here this morning. What I want to talk about first is, as you know, many of you know, Entrepreneurship Week was canceled earlier. So this is just a small version of what we're able to move forward with from some of those. And we've tried to adapt them to our circumstances now. So many things have changed in just the last month. So with the federal programs and other things coming out, we wanted to kick this off with your financial statements, because that's first and foremost on a business. But just a few things I want to talk about. For those of you who's watching, if you go in the upper right-hand corner and hit speaker view, I think it will be easier for you. So you can actually see Shelly speaking and her face versus the faces of everyone else. So if you just go in the upper right-hand corner, if you're on your laptop and you can hit speaker view, it will make just one big picture there. So you'll be able to interact with Shelly and I. We're gonna, Shelly will be speaking in just a moment. One of the things I wanted to share with you real quick is that we're gonna have a series of 6 of these webinars over the next 2 weeks. So I just wanted to show you here real quick the other webinars coming up on Wednesday. We're gonna be how to finance your business in this, SBA and other financial options, and be talking about that. Ronnie Maurer and Cleese Moss is gonna join us for that. On Friday, we're going to be joined by Mary Ingersoll. We're going to talk about, for businesses and nonprofits, how do you pivot your business now? Is it same as always, or what do you need to do and how to pivot it? So we're going to work on that. Next Monday, Natalie and I are going to do creating and updating your business plan. You know, like we've always talked about, your business plan is supposed to be changing and you have to update it. Well, this is causing us to change and update even more drastic. So we're going to talk about that business plan. Next Wednesday is getting people to your business, creating a marketing plan with Dr. Philip Frank from Missouri Western. And then our own Muse Sutton's going to be doing social media and being at the forefront and how things have changed in just a short time for that. So that is our series of 6 that we hope you can join us throughout the next 2 weeks on this. So the other thing I wanted to mention to you is Shelly has been great enough. Oh, Shelly's picture's not there. She's been great enough to do this. She's doing it from her phone because she doesn't, there she is, and had to come into the office to even do this because they're not strong enough at home. So we appreciate her doing this. But she does want you to be interactive here. So you've got the handout of what topics she's going to cover. We encourage you to ask questions though. So you can either unmute yourself one at a time, and then we ask you to mute it again because that background noise can get really distracting. But if you do that and then ask your question, or raise your hand and I'll unmute you, or we also have the chat going. So please ask her questions. We'll make this as interactive as possible. So without further ado, I want to introduce Shelly from Sumner, Carter, Hardy, and Schwichtenberg. We so appreciate her joining us this morning in a very busy time, April 13th. Woo. So thank you, Shelly. I'll turn it over to you.
Thank you, Annette. Well, I want to apologize to everyone if I do have some internet problems. I am on my iPhone. We tried to find a webcam and they're all sold out. So we're making do with what we've got. So if it kind of freezes up, we'll stop and we'll get back into it. So thank you. Yes, I really want this to be interactive. I want all of you watching.
Okay, let's wait for. Do all of you have your coffee and tea while she's coming back on? Very good, Daryl. Oh, Shelly.
Statement.
Oh, there we go. Shelly's
Are we,
back.
oh, we're going to have problems with this. I have a fear. Okay, let's just get into it.
Yeah.
I want to start with one basic question I want everyone out there to think about. How do you view your business financial information and statements? So are you actively invested in having accurate and up-to-date information on a regular basis? Or do you really just see financials as a means to an end? You have to do it, you don't enjoy it, you kind of understand it, it's just part of the job. Or are you just of the attitude, hey, I've got money in the bank, so I must be doing okay? Pretty much what I see is everyone generally falls into one of those three categories that I work with. But the basic question is, do you have confidence in your financials? This is important, not just in times of uncertainty like right now, but even in times of normalcy. You need to have confidence in your financial statements. So perhaps you have a bookkeeper, or maybe you even have your accountant that maintains your books for you. So you think you're okay, right? But are you taking the time to review your financial reports? Do you understand them? How they can help you make financial decisions and tell you financially where you stand? What I want you to get out of this seminar is that even if you don't view your financial statements, if you're not a financial person, it is critical you as the business, this is your livelihood, your business, that you understand these and ask yourself, how can I best position myself to survive in times such as we're going through right now? And I know there's also some nonprofit
Oh, Shelly.
Do you want to have her come down here? She's right.
Oh, there she is.
It's like she's 300. Shelly, you can always come to my office. You're right across the street.
I know, whatever you want to do.
Keep trying to go. We'll see if it happens. If not, then you'll have to pop over.
Okay. All right. Sounds good. So during this webinar, we're going to talk over a few topics, including a basic understanding of the primary financial reports you should know about, how properly prepared reports or poorly prepared reports can affect you, particularly how you can leverage accurate and up-to-date financial reports to provide you with the information you need during both good and not so good times. So let's jump right into it. What financial statements are we talking about here, and how do you prepare them? This is not a tutorial on how to prepare financial statements. So this is going to be very basic right here. I would expect that most of you already know what these are and have some kind of a basic understanding of them. But we're going to be talking about your profit and loss statement. So that is a summary of your income and expenses during a period of time. So it might be January 1 of 2019 to December 31st of 2019. It might be fourth quarter of 2019. It might be December of 19. The time period you pick is up to you to give you the information you need right then. The balance sheet, that is a snapshot of your assets, your liabilities, and your equity on a given date. So if we're looking at December 31st, that tells you what the cash in your bank is on December 31st, minus any outstanding checks, plus any en route deposits. It's also going to be the balance of any loans on that particular day. It's going to be what your inventory is on that particular day. That's what the balance sheet is. And then the third statement is one that a lot of business owners I work with do not look at. They don't consider it, but I find it to be important. It's the statement of cash flows. That's essentially a reconciliation of both cash and non-cash transactions that will explain what an increase or decrease in cash on hand is. So for instance, a lot of people think they can just look at the profit and loss, and the profit and loss says I made $50,000, but my bank account did not increase $50,000. So why is that? Well,
I hear that all the time, by the way, Shelly.
Right. So let's think about this. So on your profit and loss, there was $10,000 of depreciation expense. That is a non-cash item. So you have to add that back in. So now you're up to $50,000, $60,000 of cash. But you also paid $20,000 in principal loan payments that are not reflected on a profit and loss report. They are reflected on your balance sheet report. So you have to reduce that back out. So now you've got a net change in cash of $40,000. So that should reconcile to what your 1/1/19 bank account balance was to what your 12/31/19 bank account was, if that's the only changes to it. So it's important because it really helps you tell where your money is going. And a statement of cash flows is broken into three primary categories: your operating, your investing, and your financing. So your operating is business, income, and expenses. That's what goes through there. Your investing is if you sell assets. Some of those will be a gain that you will recognize on your profit and loss, but that's a non-cash gain because you've already depreciated the item in full. You've already paid for it. You've already expensed it. And then your financing is maybe as an owner, you put money into the business. So that would be a cash adjustment there.
Hey, Shelly.
Yeah.
So some of you, I see your eyes starting to glaze over. Hang in here. This is stuff you need to understand. Even those of you who don't have live video on, I know your eyes are starting to glaze over. You need to understand this. So stay focused. Okay.
Yes, and we're not going to talk about it anymore. We're going to move on from that. That was the end of that. But you do need to understand those reports to know what decisions you need to make or how they can benefit you and help you right now. And how can you get those reports? So we're looking at QuickBooks. A lot of you probably use QuickBooks, probably the majority. I have clients that try to do this in Excel. I have clients that do handwritten ledgers, literally handwritten. Every transaction for the entire year is handwritten into a ledger, and then a profit and loss is generated at the end. Time consuming. I would not recommend that. But these reports are all generated from individual financial transactions that occur in your business in that given time frame that we're looking at. So before we get into how your financial statements that we just talked about can help you or hurt you, I want to address one of the most important calculations you can use right now to determine your liquidity or how long you can survive right now with no income. So you had to close the doors, you have no income, or you have little income. How long can you survive? This is a formula called a cash runway. I actually took this from some SBA information on the website, but it is a formula we would use as well. So the basic calculation is, what is your current cash balances divided by your monthly costs you're still incurring? So those are going to be your fixed costs. You've shut the door, you have no income coming in, you still have to pay rent. You still have to pay some utilities. Those are your fixed costs. You have to pay them no matter what. So if you take your current cash balances divided by those monthly costs that you still incur, that is your cash runway measured in months. How many months can I survive before the plane goes off the runway and crashes and burns? That's the best way I can think of it. So that you know I've got 3 months. I can pay my minimum bills. I have 3 months. This thing we have to be back to some kind of normalcy in 3 months or I'm out of business. You can also,
Shelly,
go ahead.
I'm sorry, but I think that's really important. And that's why so many of you, I've encouraged you to come in on this, is not only to understand your financials, but use them for that projection. You know, we're working with many of you individually, and you guys make me smile seeing your faces this morning. But this is where we have to figure out, with the level of income that you've been adjusted to, or the other resources that you have available, how long, what do these projections, what do the different scenarios look like for the success of your business? So I'm right there with you, Shelly.
Good. I'm glad someone is.
Yeah. You're doing great.
And one step further than that is you can use the cash runway using all access options. So what that means is you take the current cash balance that we just talked about, but now you add in amount of cash that could be tapped. So maybe that's a line of credit that you don't use right now, but you could. Maybe that's SBA loans that are available to you right now. Maybe it's credit cards. So now you take all of that combined, divided by those monthly fixed costs. That is the longest currently available cash runway measured in months. So maybe the first calculation was 3 months, I can survive and I have to close the doors. If I start borrowing money, using the SBA loans, I can now make it to 6 months. So those are two really important, very easy to calculate things that can help you make some decisions, to start making decisions.
Hey, Shelly, John's asking here, has Missouri provided any relief in paying first quarter sales tax due at the end of April? That would provide significant relief. I see other states have done so. Oh, she done so good. Hold on, everybody take a coffee drink while we wait. Oh, there's Natalie. She'll come back. This is just like.
There we go.
There, Shelly's back. Okay.
I have not heard that Missouri is providing that relief yet, but I will look that up as soon as we get off, and I will send that to you, and you can push it out to everyone, to you and Natalie. Okay? So
Very
we will
good,
get
John.
that.
Good question.
We will get that answered for you if we have an answer yet. Okay. Okay, so now that we've kind of talked about that, let's talk about how you're in that category of, I knew I had cash in the bank, so my financials are not in good shape. How is that hurting me right now? So the number one, are we still there?
Yep, you're good.
Okay. Okay. The number one way honestly, right now is it's delay in obtaining loans. So you want to obtain the EIDL loan. Financial statements are required with that if you have not filed your 2019 business tax return, whether that's an individual with a Schedule C, whether that's an S corporation. If you have not filed that, they are requiring financial statements, your profit and loss that we talked about, and your balance sheet that we talked about. They're also requiring a year to date, so first quarter probably, of 2020 financial statements. So if you're not maintaining those on a regular basis and keeping them in good shape, you're going to be hurting, because now you can't apply for these loans until you get them in shape. So now you're behind the 8 ball. And you also, with the EIDL, have to provide personal financial statements. So you need to know how the business is doing to be able to provide the personal financial statements. What's your equity in the business, because that's part of your assets overall. You also need to be able to report your revenues and your cost of goods sold. So revenues, most people can kind of come up with that. That's pretty good. I've gotten several comments and phone calls from clients on cost of goods sold. So how do you know if you even have cost of goods sold? How do you know what that number is? So what I want to make a comment on that is many service companies, such as accounting, we do not have cost of goods sold at all. It's not addressed specifically in generally accepted accounting principles, but cost of goods sold is defined as only the cost of inventory items sold during a given period. So I have a lot of clients that will include in cost of goods sold their wages. But my advice for the purpose of putting in cost of goods sold for like the EIDL loan application would be just your cost of goods sold for what you sold during the time frame they're looking. Do not include wages. If you're a service organization, you don't include anything. You won't include cost of goods sold. If it's not listed on your income statement, no deduction can be applied for these costs, is what it says. But for the purpose of EIDL, that's the main thing to know. Service organization, you're not going to have it. Non-service organization, you might have it, but it's only the cost of the materials you sold or the product that you sold. It's nothing else beyond that. Because that's a question I've gotten a lot of.
We've got that a lot. If anybody's got any questions on that, type it in the chat room or wave your hand or unmute yourself even, guys. You're allowed to unmute as long as you mute back afterwards. But that was an important one for anybody who...
This is Daryl and Marceline, and
Yep.
It's my understanding that they now want all of your operating costs, also your rents, your insurance, your utility bills, and all that to be included in that number. That came out in a deal from Jackie's Friday and a webinar that she attended with the SBA. Does anybody know about that, or am I wrong?
Shelley?
Okay, I didn't hear any of that. I'm sorry.
So he said he heard through another source that you're to include all of that in your cost of goods.
I think they said you had to check what you had made and what you had spent and have both balances for those PPP loans. Like everything you have put out so far, what he's talking about in your business totally. And then everything you brought in, and you had to have those true numbers when you went for that PPP or that ELSI. Those were the true numbers she said were important, I think, right? Is that right, Carol?
And that's different than the cost of good aspect that Shelley's talking about.
Yeah, yeah. That's like the
Right.
total numbers at the end of the.
Yeah.
In Jackie's report, she said there had been 17 revisions made, and I think the original application said cost of goods, but then they changed it later on to. I don't know that it included payroll, but I don't know the answer to that. But I know it did include, from what I understood, it included rents, insurances, and all of that type of stuff.
Right, that could be. Hey, Shelley, we've got another question on here from Crystal. She's asking, service business depends on specific paid software platforms. Can these be expensed as cost of goods, software platforms?
I would not. Personally, we don't here at our firm. So,
but in order for these programs, could they be included?
Possibly, but we don't have really good guidance on that. So that's the problem. It's the problem we've got across the board is there's very little guidance right now.
And I think everybody that's got their video on is nodding their head.
Yeah.
The frustration right now is
I think one of the most important things is what you report for the EIDL loan should match your financial statements. So if you're taking it as a cost of goods sold on financial statements, match the EIDL. I think that's going to be the primary thing right now. I don't know how really detailed they're going to get into that, how much they really care about that information.
Here, Shelley, here's another question. Ron's in the equipment rental business. Our accountant says we don't list CGS on our books since we do not pass title to an end user. But colleagues in our same industry feel otherwise. What's your opinion?
Well, if you're in the rental industry, you're not going to have the equipment's not going to be cost of goods sold. It's going to be inventory. You maintain it as inventory, so it's a balance sheet item, not a cost of goods sold item. So you would capitalize that inventory, and it's going to be reflected as depreciation.
Okay. Okay, I think that's it. Very good.
Okay. All right, moving on. Okay, so we're talking about how poor financial statements can hurt you. So another way they can hurt you is your inability to make sound financial decisions. Because if you don't have good information, you can't make those. So what are we talking about there? One of those is, what are your fixed versus variable expenses? And those are really important right now. You can cut labor. I understand people really don't want to. They don't want to lay off people. They don't want to, negatively impact their employees, lives and their families' lives. But it is a cost you can cut. You cannot cut rent. You cannot cut utilities. You may get a little bit of relief if you have a really nice landlord, but you can't ultimately cut them. They are fixed costs that you incur. Insurance would be another thing, versus payroll, cost of goods sold, donations. You can cut those costs. Those are variable. So good financial statements will help you identify those. If you have poor financial statements, it's going to be a little harder to identify those. So everything takes a little bit more time, which means you're not making those good financial decisions on the get-go. You're making them more on the back end. What are your true business expenses? So this is something I see all the time. I got a new client from another CPA, and they had personal expenses mixed in with business expenses. And I'll be honest, that CPA, which surprised me, had told them it doesn't matter. It's all you. That's not true. That's the farthest thing from true that I can even think of. I don't care if you're a Schedule C. I don't care if you're an S Corp. If you have a business expenses need to be kept separate from personal expenses. So an instance of that would be, I was looking at their prior year QuickBooks, which did not match their tax return, mind you. Why? Well, one of the things that was in their QuickBooks as an expense was travel expenses that were personal. So
Okay, she's froze on this. This is an important thing for many to understand of the personal expenses embedded in your business expenses. For those of you, we can't see everybody's video. There might be a few queries here or guilty looks, but remember, whatever you put on there has to be defendable. So
right.
you can defend it, then it can be included. But okay, Shelly's back.
I'm so sorry.
It's going great.
These are good lessons for next time, right?
These are real happenings.
That's,
IT world is definitely one of them. Daryl out in our scene will tell us that our internet service has much to be desired throughout our region.
Right.
Is anybody counting how long when she freezes it takes it to come back? 1, 2, 3. Yeah.
Okay.
There. Okay. Oh. You're back, Shelly.
Okay, we're back. Okay. Poor financial statements will affect your ability to analyze your profit margin. So what is your profit margin? That is a ratio of a company's profits, sales minus expenses divided by revenue. So the rule of thumb is a 10% net profit margin is considered average. 20% is considered high or good, considered low.
Oh.
And basically it tells you how well the company is handling its finances overall. I like to relate the profit margin to cost centers. So that's what I want to talk about next. If you don't have good financials, you're probably not using cost centers. So what's a cost center? So a good example would be a restaurant might want to have, instead of everything is just one big profit and loss, they have it separated. Here is my income and expenses related to my dine-in business. Here is my income and expenses related to my catering business. Here is my income and expenses related to carry out. Then you can figure out your profit margin on each of those. But what that would help a restaurant doing right now, they're only carry out. Maybe that's all they're doing right now. So they know exactly what expenses they can cut because they're not doing dine-in, they're not doing catering. They know exactly what expenses they can cut if you have good financial statements. If you have poor financial statements, these are the kinds of decisions you cannot make. So I think that's really important. And that's where QuickBooks classes, if you're not QuickBooks, I go to a workshop class. QuickBooks has what they call classes, and it will literally, you class every transaction to one of those separate cost centers, and it will show your income and expenses only for that. So it's a really useful tool in QuickBooks, but I'm not getting into QuickBooks right now either. So those are the kind of decisions you can't make with poor financial statements. You have a harder time knowing what your true cost of labor is. I've had a lot of clients calling me because they're doing the PPP loan and they're like, I don't know what my health insurance is. I don't know what, what do they mean by state tax, the state and local taxes? I don't know that information because they are not keeping good financial statements. Maybe they're even using a payroll company. So they have that information, but if they look at their QuickBooks, they're not entering those transactions correctly into QuickBooks. So they don't jive together. So they still have a harder time getting the information they need for those loans. Ability to manage inventory could be minimized. So some people have inventory systems. That's really helpful in a time like now. You know exactly how much inventory you have on hand. If you're using the cost centers for different items you're selling, you know what you're selling, so you know what you don't need to purchase. You don't need to buy more inventory. Let's figure out a way to change our business model and utilize what we have.
We'll let her know that, hey guys, so many of you, and I'm seeing you there, you've adjusted your business now, so you know what your expenses are for the next several weeks. Have you gone back and changed that on your your budgets that we go by.
Right.
Jessica, I see you there. So have you gone through and figured this of what your overhead is? You have some sales going on here. Have you been able to adjust what you're doing for this? There you go.
We did it at the same time. Yeah. Yeah, I've got right in front of me my fixed, bills. So now I really know what I can get by on, for sure.
Mm-hmm. So there's an example of what Shelly's talking about. Thank you, Jessica.
Okay, so now, and then the last one I had said that I don't know if it went through was just, if you have poor financial statements, what that's doing to you right now is creating more stress in an already stressful time. So that's a really big thing right now. The more you can have an easier time, you understand your financials, you know exactly what changes you need to make, the more you're going to breathe a sigh of relief, because we have a lot going on. It's very chaotic right now. It's a scary time. The more you can minimize that, the better. So now we're going to go to how you can benefit from accurate and up-to-date financial statements. So as we talked about before, if they were poor, you were going to have a hard time getting loans timely. I can tell you the clients I've had that have applied for the PPP that have already been accepted have really good financial statements. They were the first ones applying and they've already received funds.
Mm-hmm.
And that's why, because they were ready to go when the opening window was there. So it's really important.
And that's good. And for some of you, I've got some more texts earlier today. Some people have received that PPP money.
Mm-hmm.
They were able to hit the ground running. So yes, another reason to have those financials in order for when needed.
Yes, and the same with the EIDL, but when that money's coming through, it will be easier if your financials were in order. It's just going to be delayed. Everything's delayed if you have poor financials when it comes to any kind of financing. Ability to make sound financial decisions. So we talked about what expenses are necessary, which can you spread out, which can you shave off. We talked about the fixed versus variable. So you're now able to make those decisions. What is the timing of my receivables? So if you have good financials, you know what your receivables are. You know who owes you money. You know how long it's outstanding if you're doing really well, good financials. And then you can ask yourself, how can I improve collection time? So you can contact those customers you have a strong history with. You can request payments made as soon as possible. Maybe you offer a discount to encourage them to pay a little quicker, because that's what you want. You've got to have money coming in the door to help pay these fixed expenses. You're able to make those decisions and know who to contact, what to do. The same thing goes with vendors. If you're using QuickBooks to put your bills in and you know when your due dates are, you're not paying before the due date, because why would you pay before the due date? You're trying to save as much money right now as you can. But another good aspect of that is you probably, because you're using QuickBooks, you have paid timely to all of those vendors in the past. So now you have good relationships with them. Now you can contact them. And what do you ask them? So the first thing you're going to ask them is, can I have more time to pay?
Mm-hmm.
They may or may not say yes, because they're hurting as well. But what they maybe will do is maybe they'd be willing to discount current bills in exchange for long-term purchasing contracts. So there is options and things to think about. And if you have good financials, you can think about those right now. You're not playing catch up to, I need to get loans filed and I need to get my financials up to date to file those loan applications. You're up.
Yes, so on this, we've talked about this, and so hopefully you've looked ahead to your bills right now and see, what do I have to pay if I'm down on my income, and what can be delayed some. So, some of your basics have to be paid, but what else doesn't? So there you go, Shelly.
And how can you adjust your business plan to improve your profit margins? You're going to have a better understanding of what you can do if you have up-to-date, accurate, current financial statements. You can use classes to determine which areas of your business are the most and least profitable. You can focus on services that generate the most profit. Let go of clients who might be costing you more money than you realize. Optimize your pricing structure. Now is the best time. You have time on your hands. Be looking into these things. How can I make things better in the future? As soon as we kind of get back to some degree of normalcy, we get the economy opened back up, what am I doing now that's going to make things even better for me in the future? Not the same. I don't want what I had before. I want it even better. So you can work on your pricing structure. You can identify areas of waste or unnecessary expense to reduce from your operations right now while you have time. That's what good financial statements will help you do. And then consider, we're going to consider reducing payroll expenses right now. I don't know if a lot of you have heard of the Shared Workplace Program through the Division of Employment Securities. I know there's some information on the Chamber's website about that really good program that can help you if you don't want to. You still need employees, but you don't need employees for 40 hours a week. You need employees for 32 hours a week. Well, that program, if you apply for it as an employer, will help them get some unemployment for that 8 hours they're now not working. So it kind of fills in that gap of what you can pay them versus what they were getting paid, so that you don't have to just completely lay off employees. And then of course the Paycheck Protection Program that everybody is applying for. So I'm not going to go into a lot of detail on that because I think we all are pretty up to speed on that for the most part. What I do want to talk about with the Paycheck Protection Program is because so many of you are applying for those loans, I want to talk to you a little bit about how do you record those loans once you receive the funds. So what we are advising our clients to do, and what our firm has actually done, because we have already been approved for the PPP program, we have set up a separate bank account because we don't know, and we have not gotten guidance on the back end of this. We're told it's going to be, a portion of it's going to be forgiven. If we maintain our wages at 75% and utilize the other 25% for the approved expenses, it's going to be forgiven. What documentation is going to be required to prove that, we do not know yet. So what we're advising is you open a separate bank account. When you receive those PPP funds, they go directly into that. You then pay those wages for that 8-week period out of that bank account. You pay your rent out of that bank account, your utilities out of that bank account, because that keeps a very clear documentation for when you go to provide that for the forgiveness portion, that those funds were used in accordance with how we were told they had to be used. So really important. We are advising clients when you receive those funds, if you're using QuickBooks, it's going to be a debit to your bank account because you're increasing your bank account. You've got that money now. It's going to be a credit to a liability account because technically it's a loan. It has not been forgiven yet. So until it is forgiven, it's a liability. It's something you have to consider you would have to pay back if the loan forgiveness doesn't follow through. And then the other thing I want to mention with that, because we have not gotten guidance on this. So we have gotten guidance that if you receive $20,000 in PPP funds, that is not going to be taxable to you. What we have not gotten guidance on is next year, you received $20,000 in loan forgiveness for $20,000 of wages you paid out. Will you be able to deduct that $20,000 in wages next year? Because that's really double dipping. We don't know if the IRS and the government's going to allow that. So it's just something I kind of want to put out there for people to think about. We are not 100% sure if you're going to be able to deduct these expenses that you had a loan for that was forgiven. So something just to keep on everyone's radar until we.
Oh, there she is. Hey guys, so I want to ask all real quick, because I work with so many of you. How many of you love doing your financials? How many of you does it excite doing your financials? Those of you who have your video on, raise your hand. Those of you who don't have, you can do a reaction down below and either do a wave or a thumbs up. But I want to see from you guys, how many of you love doing your financials? Go. Yeah, Jessica's a thumbs down. Lee likes it. How about reactions or from any of ours? Tanya, what were you doing there? Is that a, yeah. How about you, Dave? Do you love doing your financials?
You know, I don't mind doing. Shelly's happens to be my accountant, and she's awesome. But I'm learning as I go with all this stuff. I love looking at my financial because it's basically a play sheet of where my business is or where it's going, and it's a strategy. So the more I look into my financials, the more I know where I'm going. But I'm learning all the time because I'm a fairly new entrepreneur in the whole scheme of this. But I know from my past history, business owners that keep track of their financial statements and look at it monthly or weekly at least, and sometimes daily, they are the ones that are thriving and prepared. And that's kind of where I want to be too.
Yeah, thank you, Dave. For some, it's a necessary evil, but they get that. As a business owner, they know that it's part of it. I'm looking on the chat room. Jeff just laughed at us. Preferred Pest says no with an exclamation mark. Emily did a thumbs up. Owner said, I wouldn't love it, but maybe we're friends. Crystal says finances are only fun when they are flush. That is, there you go. Is not in love with them, but I use them. So that is wise. Marshall says not so much, but can be stressful at times. Absolutely. But I want to reiterate what Shelly just said earlier, though, is for many of you, when I'm working with you, you guys say, I don't have time. I don't have time. I'm focusing on all this. Now's the time. And that's why I wanted Shelly to be first and foremost for you guys is there's no excuse now for most of you. You've got the time, understand your financials, transfer that into a projection budget as well that you can use as a document. Okay, there you go, Shelly.
Thank you. Well, and that's really what I had. That was all I had. But I want to reiterate too, I understand that not everyone has a financial background. It's not something that comes easy to you. You can have a bookkeeper that prepares your financials. You can have an accountant that prepares your financials and, you know, does your bookkeeping for you. If they're in good order, even if you don't understand them, maybe you're looking at them and you're like, I still don't understand what this is telling me. That's where your CPA can come in and really help you. That's where an Annette can come in and really help you. But without that, we can't help you.
Yeah, I'm looking here through the names that are on here. So even like new people whose understanding are looking into business, like Maddie. I see Maddie's on here. Maddie, congratulations on being here, listening to all of this. Because even if you're not using it now, this is wise for whenever you do need it. So Shelly, we've got a question here from Ronnie. Ronnie says, how can sole proprietors show what they are paying themselves for PPP?
Technically, PPP is your net income. For the purpose of the PPP, what it is your net income. So you need to have a really good profit and loss report that has an accurate.
So that question's been had by many. So Ronnie, I thank you for asking that question. So what Shelly just said, if you are a sole proprietor and you're applying for the PPP, then it's the net profit. The net profit is what you get to then use for that. Okay. Hi, Shelly.
Are we back?
Yep, you're back.
The answer go through there.
Yes. So you said it's their net profit. That's how a sole proprietor would use it for PPP. Okay, what other questions do we have here? Let's utilize, you know, usually you have to pay big bucks for this for your accountant. Shelly's giving it to you for free. Thank you, Shelly. So what other questions do you have for Shelly? Either you can unmute yourself and ask her, or you can put it on the chat. Or if you want to keep it private, you can private chat me on there or text me and we can ask her that way too.
I've got one. So I've searched on the internet and I've asked other people, you know, we're a city-owned business, but we definitely could benefit from that PPE. But I don't, is there something separate for government entities?
So Shelly, she's with Duncan Hills Golf Course.
Right. I don't know of anything separate. I can do some research on that and looking, but you're right. You don't qualify for the PPP. So, because you are city owned. I know part of the $1 trillion, I have a client that's in healthcare and they received Medicare money to help kind of bridge their gap, because even though they're an essential business, their sales are down. So I know there were some things through that legislation, besides just these primary things we're talking about, and that we all know about. So I can do some looking and try to find that answer.
That would be great, because it's
We also might toss that out. I see Ronnie's on here. I'm not sure about Khaleesi, and they're doing the workshop on Wednesday. And so maybe MOCAN has an understanding, because that go through the city governments, and maybe it's a CDBG or whatever of those other acronyms there are. So maybe they could mention that as well, Dee. So join us on Wednesday, Dee.
I will.
Ronnie, Daryl, you got a question?
No, I was going to make a statement. It's my understanding that the CDBG and the USDA is coming out with specific programs for the cities.
Okay, very good. Thank you, Daryl. By the way, Daryl's the economic developer over from Marceline, so we appreciate him joining us. Ronnie asked, how can business owners determine if PPP or tax credits benefit them more?
What tax credits are they considering?
Ronnie, what tax credits specifically are you referring to? We'll see if she taps that in here. Jessica's asking, what do I do if I'm applying for PPP, but an employee just applied for unemployment benefits?
Well, that's a good question, because that would affect your FTE calculation, which is going to be part of it. You're going to have FTE portion of it, and you're going to have your wage portion of it for the loan forgiveness. So if either of those changes significantly, that can affect your loan forgiveness. It may not completely eliminate the loan forgiveness, but it could reduce the amount of loan forgiveness. So that's a good question. They can always, if you get the PPE, they can always choose not to get unemployment and not go that route. They can stop that process, basically, so that you can pay them. It ultimately depends on what is your ultimate goal. Do you want them on unemployment? Did you lay them off? What's going on there? And part of the problem is, so they may go on unemployment for 2 weeks or 3 weeks until you get PPP funds, and then that's what starts your 8-week cycle, is my understanding. So then you hire them back on and are paying for them for that 8 weeks. So maybe they get unemployment for a couple weeks. Of course, we all have, I think there's a waiting week, but that could be an option. So that once you get the funds, you bring them back onto your payroll.
Okay, Shelly, back to Ronnie's question. So how can business owners determine if PPP or payroll tax credits benefit them more?
Oh, so he's talking about the paid sick leave?
Okay.
I assume. That's what I'm assuming. Okay. Well, the paid sick leave, again, we don't know a lot about what the requirements are. I don't know if the people that are going to be talking next week know any, or, about that and can chime in on that. But the PPP is forgiven. The paid sick leave, we don't know a lot about it yet. We're still working on it. There's still a lot of questions on it. I know I interpret it differently than some other people in my office interpret it, which is kind of problematic. It's a concern to me that you think you're following it, and then anything with the government, when they tell you things, everyone is always is it too good to be true? I mean, we always think that. That's what we've been taught. Free money, that money just doesn't fall off trees. You don't get free money. So we don't know on the back end of any of this what documentation is going to need to be required. The PPP is pretty straightforward at this point. We know about that. And that's got a limited time frame. So right now, my advice would be PPP, because that's got a limited time frame to use those funds. But the paid sick leave, I think you can use anytime up to the end of the year. So I would advise PPP right now. If you still need something, paid sick leave, if you qualify later on in the year.
Here's another one. My question is, with PPP, I cannot reach 75% of the average labor numbers. Our business has fallen off, so it's not worth it. Is that correct?
Well, so ultimately PPP is a 1% loan. Even if you don't get loan forgiveness, you're getting a heck of a loan at a really low rate. So if you need those funds, but the purpose of PPP absolutely is to pay wages. So ideally you would pay those wages. Even if the people aren't working, you would pay those wages to get the loan forgiveness, because you got to hit that 75%.
And part of this is the discussion several of us have had is, if you've got good employees, you want to keep them connected to you
Right.
too. You don't want them to necessarily go off and be disconnected from you. So part of this is paying them whatever percentage of that wage you can for them, so they stay connected to you and they're still your valued employee on the other side of this.
Right.
Let's see, I had another one. Oh, Olin's asking me, would the $600 extra UI be a disincentive for the PPP for the employees?
Okay, say that again.
He's saying, would the $600 extra for the unemployment be
Right.
disincentive for the PPP for the employees?
Yes, you can't do both. They can't be on unemployment and get PPP, because you're paying them wages. If you're paying them wages, they can't apply for unemployment at all.
Okay, so Jessica's asking, would it be benefit to take the PPP in comparison? So what are you telling most of them should do right now for employees, Shelly?
Almost everyone I've got is doing the PPP. There's a few that aren't, because I do get some that are leery about it, because we don't know what the documentation is going to be on the back end. But at the end of the day, it's a 1% loan. So even if you don't get loan forgiveness, or if you don't use the funds, you can pay it back. I mean, where else are you going to get a 1% loan? So right now, most of my clients are doing it. Our firm did it and applied for it and have already received it. The funds are still there, I understand. They're working on allocating another $250 billion to it, because the first $350 billion they realized quickly was not going to be enough. I don't think another $250 billion is going to be enough. I think had people had.
While we wait for Shelly to come back here, guys, so if you have any further questions, go ahead and email them to me and I'll get them to Shelly and we will get them answered. I know some of you even had deeper questions than what you want to put on the chat or say in front of people here. So don't hesitate to email me them at aweeks@missouriwestern.edu. Okay, Shelly, you're back. You got to keep moving so we don't, maybe you're just freezing and just sitting there in place.
That's it. You caught on to me finally.
Okay, so the PPP, let's see, are there any more questions here? I had a few texts here. Shelly, I've got several people saying how great you're doing. So we really appreciate what we're doing. We're down to our time here, guys. Like I said, if you have any other questions, don't hesitate to ask. We'll get, Shelly is willing to answer those. So we greatly appreciate Shelly with Sumner, Carter, Hardy, Schwichtenberg joining us. Again, I'm Annette Weeks from Missouri Western Center for Entrepreneurship. And just as a reminder, we are having a series of webinars that we are partnering with St. Joe Chamber of Commerce for the next 2 weeks. There's 6 of them. On Wednesday, SBA and other financial options. So we're going to be talking about some of these programs further with Ronnie and Mocan and other ways to finance your business in this bridging to back to where your business will get to hopefully. On Friday, Mary Ingersoll with Pivoting Your Business Model in Hard Times. She's had to drastically change hers, and she's going to share that with us. Next Monday, Natalie and I are doing updating your business plan, or for some of those, creating an original one. So we'll be talking about that. Next Wednesday is getting people back to your business and creating a marketing plan. And next Friday, our own Mew is going to be teaching you at the forefront of social media and all the changes that's happened there. So again, we launched this series because some of you have some downtime now. So now's the time to dig in and work on your business planning. Get at the forefront, get everything in place so that when you are up and going again, you'll have that solid base and ready to hit the gate running. So we have people in here saying, thank you, Shelly, great information. We appreciate you all joining us. Natalie, thank you for putting us up here on Zoom and getting us all connected here. We appreciate it.
Thank you guys. And as a reminder, we will record this and have this available for you if you are wanting to re-watch it or share it with a friend. Thank you guys. Have a great week.
Bye.
Bye. Thank you.
Bye.
Thank you, Shelly.
Thanks.